My name's Ryan Day from Calvert Home Mortgage. I focus on business development, been with the company for 3 years. Really excited to share the material that we have coming up. I know there's uh, some uncommon opportunities within the marketplace. We feel that our unique products really have a tailored solution in order to capitalize on some of these unique opportunities that are coming up in the marketplace. I'll let Rob introduce himself and then I'll jump right into it.
Thanks, Ryan. My name's Rob. I'm a senior underwriter with Calvert Home Mortgage. I've been with the company for coming up on 5 years now. And yeah, I'm really excited about this webinar, but also this upcoming year. It's been tricky for the last couple of years in the mixed space and the alternative space with changes in rates and everything that is brought from the value corrections to some of the pain points with investors. I feel like we're entering a period where we're going to have a little bit more, I don't want to say stability, but there's going to be a little bit more certainty in the cost of capital. There's a little bit more confidence to where that's headed and the benefits that that'll bring, such as more stable values and activity and whatnot. So we wanted to take this opportunity to get in front of you awesome brokers and let you guys know what we're doing. And hopefully we're able to support more of your business this upcoming year.
Perfect. Good summary. So just give you a brief overview of the agenda. We'll do a quick product review, also review our flip analyzer tool that we know brokers love, review lead generation tips of where we see brokers being successful, market and advertising our products to generate business for themselves, and then a Q&A as well too. If you have any questions in the meantime, feel free to put it in the chat, and then we can certainly review at the end of this call. So a little bit about Calvert Home Mortgage. We've been in business for over 40 years. If there's anything that I could request as a takeaway is that we really focus on short-term lending with strong exit strategies in under 12 months. So if you require a mortgage in 12 months or less and the exit will either be a sale or a refi, within that 12-month period, we'd love to have an opportunity to take a look at your deal. Last year, we lent out just over $350 million in 2023. And we've been in MIC in 1982, primarily in Alberta. So we have lots of experience managing risk in a turbulent market. So lots of experience reviewing files and funding deals. And the main thing that we're always looking for is that we're just setting the client up for success. So as long as the deal makes sense, it's in a location that we lend and we're setting the client up for success, we'd love to have the opportunity to take a look at your deal in order to help support your clients. What we really focus on, the bulk of our business, is lending to people who buy, renovate, and sell, or buy, renovate, and refinance if they're looking to keep it as a cash flowing rental property. What makes us different is that we are able to lend with as little as $20,000 down if a client is buy, renovating, and selling, or buy, renovating, and refinancing. We underwrite quite unique if a client is flipping. The main criteria that we're looking for that we'll get into is that they have the capital. We don't underwrite typically off traditional GDS, TDS if a client is flipping. However, if they are buy, renovating, and refinancing, then we will take a look at that underwriting criteria just because our exit is predicated on the client getting qualified at a traditional lender. This product makes up around 65-ish, 70% of our business. A big portion is also our interim purchase product. So it's primarily the same as our flip product, except no renovations will be completed. So an example of this would be if you have a client that is purchasing a primary residence and A lender or B lender can't close in time, and you just need a quick mortgage solution to help the client close, then the client will work on a refi. Or pre-construction as well too. We're seeing quite a big uptick of clients requiring pre-construction just to help the client close and then either sell or refi. And then bridge loans as well too. So obviously if the purchase and sell date don't line up and you need a quick closing solution to help the client close on the property, and then we will get paid out once typically their primary resident sells. So I know that there's hundreds, if not thousands, of individual lenders, mix, alternative lenders. This is what really makes us unique in the marketplace. So we can fund deals in as little as 2 to 3 business days. Contingent that we have a broker complete package from yourself. And how we're able to offer such a quick closing solution is because we do our own valuations in-house completely for free to your clients. So we do not require a third-party appraisal as long as the value of the property is under 1.5 million and it's 4 units and below. We currently have 4 in-house analysts who value properties as is, or if they're doing renovations as if complete. These are completely free for your clients. They're done within 24 business hours, and it just really helps the client save, a few $100s on an appraisal, but also time and speed that they're able to close the transaction with not requiring a third-party appraisal. All of these valuations are done completely remote as well too, so we don't need access to the property. No one physically needs to be at the property in order to provide these valuations. All of our mortgages are fully open, so clients are incentivized to be in and out as quick as possible. We have no renewal fee options as long as clients are in good standing for an additional 6-month extension of the first part of the loan. We're also able to pre-approve clients as well too. So if they're actively looking for properties in order to flip, as long as you submit app, credit, NOA, proof of funds, as well as corporate docs and year-end financials, if they're borrowing in a corporation, then we're able to do a lot of the pre-work up front in order to pre-approve that client, in order to give them an even quicker response time once they do find the right opportunity that they'd like to put an offer in on the property. I know I touched on it a little bit before, but we have low money down options. So we have rates for $20,000 down, 5%, 10%, 15, and then your typical 20, 25% as well too. So clients literally don't have enough for 20, 25% down. We still have options as long as they're doing a value add strategy on the property. Next slide there, please, Maeve. So the first product that we'll get into is our flip product that we're most known for. So these are our rates as of today. So rates are just predicated on down payment. Our cheapest capital rate now is 9.99% with 25% down, and then a sliding scale going up with the lower amount that the client puts down. I know you're probably seeing that 18.24, and it could cause a little bit of indigestion. There's a few things to note on when this could make sense for your client to have a lower down payment option. Number one is if they literally don't have enough for 20 to 25% down. We allow clients to get into the market as long as that they have a profitable deal. It's in a location that we lend, and obviously it meets our underwriting criteria. So yes, they'll make a little bit less in profit by paying more in interest. However, if you run the numbers, most of the time it makes sense to pay a higher interest rate as opposed to not doing the deal and getting into the market. Scenario number two, where it can make sense, is if a client's looking to do multiple projects at once. So as opposed to doing 20, 25% down on one deal, they're able to stretch their capital further, get the benefit of leverage that typically real estate investors really appreciate, and do 2, sometimes even 3 deals with a lower down payment option and capitalizing on more opportunities in order to grow their real estate portfolio at a quicker pace. And then point number 3 is these mortgages are meant to be extremely short term because they're fully open. The minimum 20K down, 5% down are typically extremely light cosmetic renovations. Because we fund properties in all conditions, it can be a property in very fair condition that typically banks won't lend on. Those are completely fine for us as long as it meets our other underwriting criteria. So as long as it's really short term, it really just comes down to a numbers game, and we have a phenomenal tool that we'll get into in order to assess profitability for a client in order to ensure that that the deal makes sense for them and we're setting them up for success. The minimum $20,000 down maxes out at a purchase price of $800,000. So if you have a client buying, in and around GTA for $1 million, we still are able to offer a low down payment option in around 5 to 10%. It really depends on the deal and how much they're increasing the value of the property. So we still have options, low down payment options for those of you in and around the GTA where purchase prices are obviously typically on average quite a bit higher than the $800,000 mark. Term 6 months, monthly interest only payments. We have a 2.5% fee split with you, the broker. So all of our fees for all of our mortgages are capped into the mortgage. So the client does not pay any fees on closing day. So we cap all of it into the mortgage, and you're paid typically on average around the next Friday after closing by EFT, as long as you're set up by EFT within our company. Note that we do have a minimum $2,000 lender fee on all of our loans. And as mentioned before, we fund properties in all conditions. So if it's very poor, if it's a hoarder house, dilapidated property, but it's in a good location, we typically find that those can create the best opportunities for clients in order for them to be successful. One other thing that I would note is that if a client has another property or properties with equity, we're able to value that property completely for free, go up to 75% loan to value, typically on average, on a single family detached home in second position. And clients are able to use that equity as they see fit to either reduce our interest rate or advance some funds for renovations, closing costs, operating costs, however they see fit. So if they do have other properties with equity, we are able to get creative by valuing the property, let them know how much equity is in there that we're able to lend against, in order to set them up for success and help them capitalize on more opportunities. So this is a really handy tool that we'll be sending out after this call. And the main purpose of this is to assess profitability for a client. It currently has Calvert's branding on it, but you are more than welcome to take out Calvert's branding, populate your contact details, your brand colors. You're more than welcome to make marketing material out of this. Brokers love this tool in order to assess profitability and come off as the expert for your flipping clients. So in here on the left-hand side of the top left corner, it has all the costs associated with purchasing the property. So it has legal fees, title, land transfer tax. If it's in Toronto, then it's obviously double land transfer tax. And at the bottom, it populates all your costs associated with purchasing the property. In column 2, selling costs, has all the costs associated with obviously selling the property, which is primarily the realtor fee. In section D, all your costs associated with operating, which is typically your utilities, property tax, insurance. The cells in this peachish color, you're able to update as you see fit based off of obviously the deal that the client's looking at, and everything else will tabulate in the calculation in order to ensure that you're running numbers quite accurately. The only variables that you will need to populate is the month to renovate, months to sell in section E here, the client's renovation budget, the purchase price, expected after repair value, down payment, and the interest rate if you are modifying the interest rate. Based off of this, it will update the monthly interest costs, which is their mortgage payment, what they are paying on a daily basis. So in this example, $87.65, and then the financing fee as well too. And it clearly illustrates the financing costs, how much the client's paying for mortgage payment in order to accurately assess if it makes sense for the client to proceed with this option. Section number 2 over here, another breakdown of this tool is the overview of the total project cost summary. So of all the capital going into this deal, based off of the numbers that the client inputted, 50% are going towards renovation, 25% towards selling, 15% towards financing. So you're able to clearly articulate of the capital invested, how is that broken down and where is that capital going for this specific project. So in this deal, a client made $80,000, just a little bit over. We needed to verify right under the profit tab that's green, total cash needed, $75,600. We always typically round up. And before we approve the loan for a flip project, we would just need to verify that the client has access to this capital liquid as of today in either cash or debt. So we accept obviously cash accounts, savings accounts, lines of credit, joint venture agreements if they have cash or if they have proof of funds within a credit card as well too that they're able to extend. That would also suffice. If they are using debt, we would take this into our calculation just to ensure that they're not too extended and taking on too much debt in order to be successful. So in this example, the return on investment was 106%. On an annual basis, it was over 400%. Their monthly variable cost was $3,200. So each additional month that this project takes, they're eating into $3,200 in potential profit. Because time is always of the essence with these projects, we like to fully illustrate how long and how it impacts profitability if this project takes 1 month more. So you can just see the numbers down here in flip analysis in section I. So if it were to take 1 additional month, so I think 6 months as opposed to the 5, then they're eating into $3,200 of profitability. 1 month less, they're making another $3,200 in profit.
All right, so I'm going to take over from here. Thanks, Ryan. Before we can hold questions to the end, we do have the chat open. So if you guys do have any questions, please feel free to throw those in there too. If you guys want to make a comment, put it in the chat, or if you have a specific question, please do let us know. So in order to provide an accurate after repaired value, an ARV, we need to know what is inside your client's head and what their true vision for the property is. Without that, we don't know. If people are going to be, if they're not going to provide all the details that we need, as a lender looking out for our client's interest, we're probably going to opt for the more conservative option. So what we've done is we've created this renovation budget and checklist. It's a fillable form on a Word document. It shouldn't take much longer than 10 to 20 minutes to complete. And what this does is it allows us to truly understand what the investor's as complete vision for the property is. It can also be a good tool for them to manage the project as well, to understand where their money is going per line item, and also to monitor progress as well. So this is one of the things that we send out when we're ingesting our flips to make sure that we're getting the full scope and breadth of the project from you and your client. Some details as to where we lend. As Ryan mentioned, we do prefer entry to mid-level real estate. We do look at some higher end stuff, but we scale back the loan to value. We need to be lending in urban markets. Populations of at least 10,000 people within those city limits. If we're in a 50K area, we need to be within 10 kilometers of those city limits. Or if we are 100K or greater, we can look to be as far as outside as 25 kilometers outside of those city limits. Why is that important to us? Especially when we're working with real estate investor clients, higher population growth and population size are strongly correlated with the demand for real estate. So in areas where there's more people, more property is transacting, you get more data points to support your valuation, your comparable sales. You want to be seeing properties transacting ideally within the last 30 days that are similar, so there's less guesswork involved in coming up with what you think your valuation or your after repaired valuation is going to be. So we believe that this is the areas where investors should be focusing because they're going to be getting the most confirmation for their sale prices. And then also for us as a lender too, it gives us the most confidence to understanding what we're looking there as well. For our minimum and maximum loan sizes, we do not have a minimum loan. That said, we got to make sure that we aren't offending our 32% APR limit there because we are not registered as a high cost of credit lender in Canada. That said, most first mortgages, unless you're securing on something really, really small, probably not going to be an issue unless their fees are just very high, which we would discuss with you to make sure that we're providing value for our client at the same time. Maximum loan size, we don't really go above 1.5. It gets a little bit sticky. For us, reason being for us, we're a MIC. We have around 300 million working for us on any given day right now. We want to make sure that we're managing concentration as a result. As mentioned earlier, we do focus on market average homes. The reason why we like these homes and the reason why investors should focus on these homes is you're always going to have people entering the housing market and you're going to have people downsizing. So that entry to mid-level price point home, that's going to be the most active because you have buyers coming up into that segment and down into that segment. So they're getting it from both sides. Higher end homes tend to be a little bit more speculative. I did a LinkedIn post about this a couple months ago, got a lot of engagement. I was underwriting a second mortgage on a high-end property. I had 3 appraisals on it. The high appraisal was 3 million. The low appraisal was 2 million, and they were within 30 days apart. And they were both sound. That's the crazy part. So higher end property valuation is more subjective just because you don't see as many like for like comparables transacting. So what one person views as something valuable, the next person might not. So we really focus on that entry to mid-level product and encourage our investors to do the same. We do look at first and second mortgages. Obviously, 80% loan to value can be our threshold. Our fees are inclusive of this. But again, this is subject to a deal by deal basis. There can be certain things that'll influence our loan to value limitation. How do we like the property? How do we like their plan? How do we like the borrower? How strong do we view their ability to execute? These different types of things. Also, say if we're looking at a quick purchase where we got to refinance out, we can only think the client can refinance out of that property at 60% loan to value. We're not going to write a loan that they can't refinance out of if that's their plan. So we want to make sure that we're structuring a loan that's in service of you and your client's needs. Bridge loans, we can get a little bit more aggressive on the loan to value. We can go up to 85% loan to value if the property is firm sold. But sometimes people need the money before the property gets firm sold, and that additional leverage can be beneficial. So what we can do is even write a loan at 85% loan to value, but only do the first advance to 80. So we can be really creative in how we can structure these solutions for you guys. As long as we get all the information and we know what problem we're trying to solve, if there's a common sense way to approach and structure the deal, we're here for it. Just let us know, because we want to make sure that we're helping you guys out and helping you guys provide a solution to your clients, so you guys are recognized as the awesome brokers that you are. So I'm going to talk quickly about our interim purchase product. This is, aside from our flip, probably one of the most unique things that we do. We lend on, so this is for purchases where we lend on the market value of the property, not the purchase price. So generally speaking, this is going to be most common in your pre-construction possession, where somebody bought a few years ago at here, the market did this, but now we're maybe up here. So there's a bit of a spread here. Life circumstances change, plans change. Maybe it's an investor who was fully intending to sell the property as is. If you have a client who bought a property, they want to close, they want to sell it and profit, this is a fantastic product for that. If you have a client whose life circumstances might have changed and they can no longer qualify, but they want to sell and not lose their deposit, this is a great product for that. If you're working with somebody and the value of the property's gone up a lot and they don't want to put that 20-ish% down to close conventionally, why not close with us, refinance a few months later on the appraised value? They can keep more of that down payment in their pocket. This is a great option for that. We can lend with as little as 20 grand in the deal down, because we do need our clients to have some deal skin in the game. But that 20K down isn't just for flips. As long as our loan of value does not exceed 80%, inclusive of the fees, or whatever the maximum is, depending on our review of the property, applicant, and their plan, we can close. Now, it's not just for investors or people who have life circumstances as well. We know that a big piece of being a broker is picking up after, is solving problems. Maybe they didn't get their financing in order. Maybe they haven't filed their taxes and they can't qualify immediately. Maybe they went to a broker who's not on this call and didn't have their files together and wasn't able to get it done in time. Or maybe they were working with their mortgage specialist who told them everything was fine and it's not. We're happy to help those two people too close on a rush basis, provided there's an exit strategy. We can work with them on that. So again, really cool product. Takeaways are we can close quickly within a few days. We lend on the as-is value of the property, and some common exits are selling for profit or refinancing with some of those client types that we discussed before. And again, like all of our deals, no appraisals. We do that internally. This is a fully open product and we can close quickly. One of the things I'll tell the brokers on this call is underwriting a deal is easy. When you get all the information, is easy. I can do it in 10 minutes. The tricky part is getting the information that you need. So if you want an answer quickly, if you get in that information, you will have an answer within a business day. That's a non-negotiable. Where things get a little bit tricky is when we're working with incomplete information and we're trying to make assumptions or condition certain things that could be material. I also know that clients don't always do everything they can to put their broker in the best position to succeed for them. So that's my roundabout way of saying whatever needs to happen for the deal. If you want help positioning the solution to the client or collecting certain documents from the client and them understanding why, let us know. Our underwriting team is happy to engage in that with you. That said, if we can ask for we're not going to ask for 5 documents when 3 will do. We're really looking for the path of least resistance, at the same time making sure that we're writing a responsible and sound loan.
Rob,
Yes.
can I interject with a question on that previous slide?
Yes.
So as is value, I have
Yes.
a client, brand new purchase, but the value has come below what they actually purchased, what they
Yep.
actually bought the damn new construction for.
Yep.
How do we work this one?
That's a tricky one because I literally have one of those on my desk right now where they bought for 1.5. We think it's worth 1.2. We have really good comparables to suggest that. There's a few things that we can do. I'd say the first thing is it's like, hey, let's really dig into that value to make sure that we're not missing any pieces there. Make sure that we're looking at the best comparables. If the client, their realtor, whomever thinks that their broker thinks that there's other comparables that we should be looking at, send those over to us. We're going to dig into those and let you know why we think our value is our value and if we're missing anything else. If we're confident in our value, Val, purchase price doesn't always equal value sometimes in real estate, especially too, because people purchase a home, pay more for it on day one than what it might be worth then, speculating on future market increase. We got to work with the information that we have. That's the current market value, regrettably. So depending on what their objective is, we can look at writing a loan in certain ways. We can look at trying to get more down. We can look at adding other property to the deal to limit their cash ingestion into it. But when we're looking at adding blanket property to that mortgage, we want to make sure that we're not writing a mortgage that they can't dispose of. So if they're selling the property, we want to make sure that our sale price would be able to clear out the proceeds. If it's a refinance, we want to make sure that we're not exceeding 80% loan to value on that property so they could refinance it. But generally speaking, that's a tough situation, Val. I've had a few of those come across my desk lately.
Maybe we'll talk about this one offline because, oops, sorry, my phone. We'll talk about it offline, Rob.
Okay. Yeah, reach out after by all means.
Sure, thanks.
Rob, sorry, I got a quick question. So
Yep.
I'm sorry if you've gone over this already. I did get a few calls while this was going. But in terms of your flip financing program, how much of an emphasis do you guys place right now on the actual borrower's income, TDS, GDS, and all that kind of stuff, versus the property and the actual deal at hand? So do we have to worry? Because a lot of these contractors, you know how it goes in terms of reporting, right?
0.
Perfect.
We do not care about ratios. Do not care about, I mean, sure, we want people to be making money. But in terms of how it affects our underwriting criteria, I do not care. I know what's going to be on that line 150 or what's on their NOA. It's going to be 18,849 or whatever it is. Or if they own rental property, they'll be showing a loss and they're going to have a nil file or credit, and they're going to be broke from a tax standpoint, but they'll have cash or they'll be equity rich. I don't like paying the CRA either. I get it. If you're a flipper, if you're a real estate investor, you probably have your business structured in a way so you're look income poor to the government. That's fine. Well, the main things that we care about, Amit, the 2 main things are, 1, is your client going to put cash in their jeans at the end of the deal? And 2, do they have the ability to get it done? Ability relies on capital or credit to execute and the wherewithal to complete the renos. Those are the only 2 things that we care about.
And when we're talking about the wherewithal to actually complete the rentals, what are we looking at in that regard? So is it their corporation, how long it's been running for? Like how exactly do I prove to you guys that they do have what it takes to complete this rental in
Good
an
question.
acceptable manner?
Our litmus test isn't super concrete, if you will. We do interviews. Have they done work before? That'll give us some confidence. If they haven't done work before, what is their relevant experience? Do they have work in the trades? No, okay. Do they have a contractor? Where'd they meet the contractor? How are they going to be doing that? If it's their first deal and they're working solely with a contractor, we might want to have a group call with them just to make sure that they're aligned. We can judge their wherewithal also by how they submit their renovation plan. So
Okay.
if the renovation plan looks super sketchy and if they haven't done a flip before, it's like, okay, maybe this person's kind of a pretender. But generally speaking, we'll do what we can to try and help move them along. Because we're in the business of writing good loans. We're looking for ways to try and get these deals approved and educating our clients along the way. If we have very big concern on their ability to execute, and if we just think that they're not capable to manage that project, we might ask for more down or we might decline the loan. But generally speaking, Emmett, in the last 3 years, I've probably loaned out about $500 million. I have not declined a loan for that reason.
Very nice. And one other thing. So I kind of missed this part that you went over earlier. So did you say that the fees, which we're talking about, I guess the 2% lender fees that or 2.5 that we split or whatnot, does
Yep.
that get amortized, you said, with the total amount and they pay that on completion?
Gets capped on the loan.
Okay.
So the balance is the net advance plus the fees. These loans aren't amortized. These are simple interest loans.
Right. Sorry.
Yeah. Open. But yes, it's added on to the mortgage. So the client does not have to pay that at closing.
So at closing, what we're really looking at is the 2 lawyer fees. That's about it. And then the down payment, right? Whatever it might be.
And your land transfer tax, because
Oh, yeah.
because bless your province, you love tax. But yeah, and that's one of the things that we have in the analyzer too that Ryan went over and we're going to send out is we have a really good idea as to what they're going to need to bring to the lawyer's office to close. And when we go through that total required capital, we want to make sure that there's no surprises.
Perfect. But and that's all at the solicitor. But from the lender standpoint, we're just looking at just the 2 solicitor fees, and that's pretty much it. Down payment, everything they worry about separately.
Yep.
Perfect. Thank you so much, Rob.
Yeah, you're very welcome. Thanks for the question.
Yeah.
Rob, I
Rob,
think it's good to
Rob, Sorry,
Oh.
can I ask a question off the back of that?
Yep.
So I because that was something that I always missold about this product. I never realized that the lending fee was being capped on. So that's great. But will you cap that lender fee on even when you're at sort of max? You know, they've bought a house at $800,000. They've only put the $20,000 in, and loan to value wise, you sort of max out. Will you still cap fees when you're so extended?
Yep. That's the only way that we do it.
That's amazing.
Yeah. So basically, as your question is, okay, at purchase, you're basically 100% leveraged until they make those improvements. The answer is yes.
Yeah.
Yeah.
No,
So
that's amazing.
we really want to, but we're not going to be in that state for too long. So our loan to value at funding is going to be here. And then as they do work to the property, it goes here because they're creating that lift in the property, or their equity position goes from here to here, stated differently. So we're mindful of that. Our biggest risk with these properties is managing the renovation component of it and making sure that that value gets realized. Here's the thing though, Hakan, you bring me a client, they bring in a deal, we think it's profitable. I'm going to do the intro call with them. They're going to be so fired up by the end of that call that they're going to be swinging the hammer 2 minutes after they get the keys. So we know that. But here's the thing. Ryan mentioned that time is of the essence. The sooner they get in, the sooner they get out, the more cash that they put in their jeans. I'm going to show them with my analyzer, with my valuation, and I'm going to get them all so fired up to get that money back into their pocket and execute that property. The carrot I'm going to be dangling in front of them is going to be huge. So I know, listen, what motivates people, investors, is money. What motivates people on this call is probably money. That's great. Let's use that to our advantage, knowing their equity position is slim at the start of the deal. How can we motivate them to perform so they can increase that and pay us less interest so they can get their cash out and then go find the next deal and do it again?
Yeah, that's great. No, I've been promoting this product for the last 2.5 years on social media. Even though I haven't closed a lot of these deals, they've led to basically creating my book of business. So I'm so familiar with the product, and I've encouraged the team to come in and listen to you guys today. I love it. I think this product's a game changer. Thank you guys. Really appreciate you. Is Logan still with you guys?
She's on maternity leave.
Oh, that's why. Okay, so who's at my point of contact now? It was Garrett, but I think Garrett's moving up.
No, Garrett's still in underwriting. Yep.
Oh, is he?
Yep. We got a
Okay.
slide at the end with all of our contact information.
Amazing. Thank you, guys.
You're very welcome.
Rob, really quick, I got a quick question then. Sorry, it's a bit of an impolite one. So in terms of, I know that you deal with the general public, right? And I love your slides and I love the way they come across, but sometimes I'm a bit wary of putting them out into the stratosphere just because of the fact that people can directly contact. I haven't thought about it all that much, just a little bit. But my question is, how do you protect the brokers and our actual role in these transactions?
Great question. You submit a client. So we have a system, we have a CRM, as most businesses do. You submit a file to us. That client is your client. That's one of the reasons why we have that flat fee structure. So it doesn't matter if they come to us directly, or if they come to us to the broker, their fees are going to be the same. You could ask a handful of brokers that we've worked with. They can speak to this. The clients approach us directly. We engage them directly. Say you bring us a guy and you're like, hey, Rob, all this guy wants to do is shop brokers. I've submitted my app, credit, NOA from him. I don't have the time for him. He's really frustrating. I'll say, cool, let me work the deal. A few days later, you'll get your commitment letter if there's a live deal on the table, and you'll have your fee baked into there. So we make sure that our brokers that bring us, like 60 to 70% of our business on any given quarter comes directly through the broker channel. We have to make sure that we're doing right by our brokers, because if we don't have a business as a lender. And that's a non-starter for us. People say, hey, I'm trying to fire my broker. Say, no, like, I want to cut out my broker. I want to pay less fees. No, you won't, because this is the way the fee structure is. It's built to protect all parties. But let's find a way. But Amit did a great job at X, Y, and Z. This is why we're working with him. You can work directly with us, but Amit is going to coordinate the signing of the documents. Or I need another document. Amit, I'm going to lean on him for that. Or Amit did a great job helping us out with this. Here's why he's a part of your power team, and this is why he's important for your success. There's always a way to protect the broker, but the quick answer is you bring us somebody, that client is linked to a broker in our system. So even if they come to us without you, we engage you back in anyways.
First of all, 60 to 70% means we got our work cut out for us. We're not working hard enough, but we'll get that number up. And then another question really quickly, and I know that your compensation is very generous, but just because, this might be on a couple of people's minds, if there is a broker fee that's involved in one of these situations, how exactly do you treat that? Are we just dealing with that with a lawyer, or is there a chance that we can add that on your side?
So is your question, if you want to charge a fee above and beyond the 2.5%, how is that fee collected?
That's right. Yes.
Outside of our mortgage agreement.
Right.
The reason for that being is we want to make sure that we have really competitive paper out there. So somebody works with Amit, somebody works with Hakan, somebody works with this broker, that broker, that broker. We don't want our commitment letters to be inconsistent, because these investors talk. They're at all these different events. Borrowers talk. We don't want, well, Hakan gave me this, but Amit gave me this. Well, our paper is going to be the same for every single person on every single deal, pretty much. So if you're, depending on what you have done for that client and what your duty of care is for them and whatnot, if you want to charge more, that's a brokerage contract separate of the Calvert paper, and that would be required to be collected outside of the mortgage. So we don't have an LOD or anything else like that matter. And the fee is we pay it to you directly. We are set up on EFT. So after the deal funds, our accounting team can send you your fee within a few days.
Perfect. No, that makes a lot of sense. And your fee structure is incredibly generous. It's just a question that was on my mind.
Yeah, like on these deals, you know, we're each making 125 bips now. We split that 125 bips on your average house price in Ontario. I mean, I don't know what the average is, but I would have to guess it's probably somewhere in the high sixes. It's a decent chunk. The nice thing about these clients though, guys, it's like it's not your insured mortgage or your 20% down client where you're seeing them once every 3 to 5 years for your purchase and your renewal, and you're probably not getting half of those renewals anyways. These people are these investor clients are people that are turning over multiple properties a year. I know people that make a very good living as a broker and they work with few investor clients, but they're turning things over a lot. It's a volume game with these guys.
Thanks, Rob.
My pleasure.
Rob, one other thing to note, I think, because I've had it happen multiple times, I guess loan to value on single family versus condos for in-term purchase, and I guess maybe flip as well too. Shedding light on that, because I've had a few people try communicating, say, hey, do we ensuring that we do go up to 80% on condos, which isn't the case.
Yeah, it depends. Like thanks, Ryan. I'll touch on that quickly again. Our loan to value ceiling is 80%, but that's on a case by case basis, depending on the property. If it's a condo with a ton of inventory and we have concerns on downward pressure on values because of the inventory, or if there's just not many good comparables, you know, that's going to impact our loan to value. Loan to value is treated on a case by case basis, but the underwriter's job is to show you why they're making the decision. So that's one of the things that I always tell my team. It's like, hey guys, we got to kick ass for the client. We got to kick ass for the broker. We also need to do right by our investors too at the same time. As long as we are communicating the why, so everybody's aligned, that's the most important thing. Generally speaking, your shoebox apartment style condo is not going to be an 80% loan to value deal, just because those properties aren't as stable in holding their values as much as single family detached homes. But if you ever have a client, or if you ever have a file with us and your underwriter's not giving you an answer, they will give you that answer and they will show you the why. And if not, just reach out to Ryan and myself to make sure that you guys are getting the information that you need to manage your client accordingly. Awesome. So where can you find deals? When people start trying to find flips on the MLS, that's not the best place for these investor clients to be. Ryan, why don't you touch on this slide a little bit more? Because I think this is kind of your brainchild here.
Yeah, for sure. So we chatted with our top brokers and top clients in general, and we said, hey, you've been very successful with these products. You know, when you were first starting out, what were your lead generation sources? So obviously creating a relationship with investor-focused realtors or investor-focused real estate brokerages. A handful of brokers have been really successful with our in-term purchase product for specifically pre-cons, reaching out to pre-construction focused real estate brokerages and saying, hey, if you have any clients who are, you know, in a pinch, they can't close on a property because they bought a pre-con 2 years ago when rates were at, you know, historical lows. Now they're up to where they are today and they can't close. You have a mortgage product to help the client close and list on the MLS right away. And obviously we're seeing a lot of it, especially in and around the GTA. So creating a relationship with them as you have a really unique solution to offer their clients to just help the clients close. Real estate investor focused Facebook groups. When I first started out at Calvert, these were awesome for lead generation tips. Obviously, if you search your specific city, a lot of these clients post in these Facebook groups. A lot of them have active flips, and they're looking for financing when it comes to flips. Tradespeople, a lot of our clients are business for self. I believe Rob touched on it, but because we don't underwrite traditionally, as long as the client is flipping, it's educating the contractors, general contractors, electricians, plumbers that, hey, if you have the right opportunity, we have a lender that just that doesn't underwrite traditionally. So as long as they have the capital, which most of the time they do, because obviously a lot of them get typically paid in cash. They just need to find the right opportunity, and the sky's the limit for some of these contractors. So just informing them that as long as they have the capital, they have a successful deal, it's in a location that we lend, they're able to do multiple projects at once. And as opposed to doing work for other clients, a lot of them typically just find the deals, build the relationships with the other contractors and subcontractors within their field in order to do deals themselves. Investor focused meetup groups, obviously Instagram as well too. If you just search hashtag house flipping in your city, we've done quite a bit of business just from people reaching out to us on Instagram, but also us actively looking to see who's active within the marketplace. As clients are always looking for creative solutions in order to help scale their portfolio, especially once they're tapped out on traditional mortgages. And because we underwrite based off of profitability, then it typically opens up a lot of doors for the clients. Podcasts, they've been huge for us. I just have a screenshot down here of some of the top ones in specifically in Canada. The clients who are interviewed on these podcasts, typically they have sizable real estate portfolios. If you reach out to them, try and build a relationship with them, let them know that you have an investor-focused lender that's focused on short-term lending. Typically they're quite receptive to always hearing new options out there in order to help scale their portfolio. And then obviously your database as well too. So these are typically the most common scenarios that we see brokers be successful, especially starting out as it relates to lead generation tips.
Ryan,
Yep.
something that caught my ear. You said in Canada, do you also fund this kind of thing in the US?
Alberta and Ontario. So
Oh, okay.
no US.
All right, thanks.
Yeah, no problem.
Blue sky, one day, maybe. Well, there's some Canadians lending to people down there though, and it's something that we've actually talked about as a company, but it's a few years away.
We can work together. I'm a realtor out of Florida,
Nice.
and I have a lot of rehab there. And Canadians will love to work with a Canadian funding company.
Yeah,
It's a little difficult ball game down south getting money for Canadians.
it is. Yeah, and also from a lending standpoint too, the regulatory compliance, the hoops that you need to jump through, it's different. But yeah, I mean, I'd love to lend in those areas. You have warmer weather states, your depreciation on the homes, it happens faster because it's hotter, it's harder on the homes. So the exterior of homes needs to be serviced more frequently. So I get the business case for it.
Robin, just to touch on that a little bit there. So could you potentially look at a flip that, for example, Val's client's doing in Florida and use the collateral on a Toronto property, personal property that they have? Is that something that you would, that your company would look at, or just nothing to do with the States at all?
We can only secure our loans on properties in Alberta and Ontario. If somebody was saying that they wanted to borrow against a property in Ontario or Alberta to use the funds for an international opportunity, if you will, that's something that we could look at. Generally speaking, we want to be secured to our exit strategy, but if we can build a business case for it and if we can trust the person to pay us back, that's something that we could look at. But we can't do international inter alia. I wish. That'd be cool, but oh man, I can't even imagine the many. You need a lawyer that could act in 2 countries. I mean, one of our closing lawyers does, but it's no thanks. That'd be tough to set up.
So just to add to that, Rob, and for Amit, what I used to do was actually when the money was easy out here, being a mortgage agent, I used to leverage the money from the properties that they had here. And basically, once you get a HELOC, you do what you want with it. And I would have that transferred. I open a US account for them, and they transfer from a Canadian straight to the US account.
Yep.
And then from that, we will use the money for their rehabbing the property in the US.
Yep.
Yeah.
Simple,
That's what a lot of people
simple
do.
and clean procedure.
Yeah.
Hey guys, is this recording this recorded presentation, would I find it somewhere? Would you be able to email it to me by any chance?
We will afterwards.
Like at least like 10 calls in between, and I just would like to go over it when I have time.
Perfect. Hey, so we only got a few more minutes. I'm just gonna kind of go through this here. Bridges, rates, fees in Ontario. We're gonna send out the product sheet so you can have a look at that. The one thing I will say though, similar fee structure, the pricing is gonna be what's on the product sheets. Again, we can move quickly within a few days. I talked a little bit about the loan to value previously. If people can't line up their purchase and sale dates, let us know. Really what we're giving these people here is the comfort and the ability to move in and own 2 homes at once, as long as there's an exit strategy, pay out from the sale or partial pay down, and then refinance the balance later. And we're looking at marketable properties that we think can sell. That's going to be the most important thing there. Submitting a deal. We are on Finmo, Expert, and Velocity. On Expert, we're under private lender, and under Velocity, we're under alternative lender. We can receive applications and credit reports through those platforms. The balance of the documents need to be emailed to your underwriter via email. And again, I spoke to quick turnaround time. We get all the documents for the file, or most of the documents. You should be able to get your answer within a business day. We know that you guys are competing for clients. We know that clients demand a lot of their brokers. We want to be in service of you guys to provide a very good solution very quickly. So that's our commitment to you, is if we get the information that we need, we can act quickly for you as well. Sometimes we do reserve the right to apply a rush fee for files that are received within 3 to 4 days of funding, depending on the province that we're in. Again, depending on the resources that we need to deploy and what we need to push to the side to address that. In Ontario, some of the things that we don't do, debt consolidation files, we don't do as many of those in Ontario. Refinances, again, because we're laser focused on the short-term stuff, we're not looking at refinances, especially when we're being asked to buy out private debt. I've seen a lot of that lately. Generally speaking, if they couldn't execute once with private debt, why would they be able to, why should they get a second chance? Moreover, somebody calling their loan can indicate that it's a distressed file. Construction, so we don't do from the ground up construction, only rehabilitation flips. Commercial lending or mixed use, we don't really do that in Ontario. And then vacant land, we don't do that either. This is our awesome team of underwriters. This is our contact information. We're going to send this out afterwards. If you are on social media, we're very active there, YouTube, Instagram. If there are things that you want to see in terms of content, in terms of things like celebrating your success, you do a deal, you want a case study, you want it branded for your business, just let us know. Whatever we can do to support more of your business. And from a marketing standpoint, we have a great team of we have a great marketing team as well who's able to produce that content too. Yeah, that's pretty much it. Ryan, is there anything that you want to say in closing?
Renee has a question. Pre-construction, the client must have 20% down for us to entertain, correct?
Nope. We can look at it with less down because we lend on the market value of the property, not the purchase price. So depending on what their plan is and if we like the property, we can look up to a max of 80% of the current market value. Doesn't have to be 20% down.
Any other questions? We got 2 minutes. If anyone does, feel free to unmute yourself, put it in the chat, whatever
Just
works
really quickly,
best.
I know that you have an unbranded product sheet that you sent out. I love it, right? Is there an unbranded flip analyzer tool that you guys have?
No, you can just override the paint colors in there.
Perfect.
It's 6 of one, half a dozen of the other. You'd be changing it from blank to your branding, just change from Calvert colors to your colors.
And toss my pretty face on the first page, right?
That's it.
Business is coming. That's all I'm hearing.
I like you guys.
Well, we like you guys, and we really appreciate you guys taking time out of your busy day.
And I can attest to you guys helping out. They do everything they say they're going to do. You guys have helped us out on webinars. You've closed deals in 48 hours for the team. Yeah, you guys are absolutely a pleasure to, and you paid quick as well, which is also a blessing.
Thank you, Akan.
Rob,
Yeah.
How much are you paying Hakan?
Sorry?
I said, how much are you guys paying Hakan?
We fund his deals.
I have a question for Rob.
Yep.
Rob, brand new construction, cottage with a basement. Would you consider that a flip where they're trying to make it a duplex?
You say cottage?
It's not a cottage, but it's sorry, bungalow, 3-bedroom, 2-bath, with a
Bungalow.
finished base, not finished basement, but excavated basement.
So they want to suite the basement. Would we consider that a flip?
They want to make it a second income home.
Yeah, we could look at that. Like, so you're saying they want to create a suite within their existing home, and you're asking us if we would lend on the after repaired value of that, so to speak?
We will have to look at the after repair value because what I've done, the comps, it's priced a little high because it's a brand new construction.
Gotcha. So you want to know if we would close on the high purchase price today if they're creating that value add after closing?
That's right.
Yes. Subject to due diligence, of course, but yes, that is something that we could look at.
I'll email you the addresses. There are 5 of them.
Okay.
If it works, we're rolling.
Love to hear it. All right, everyone. Let me just see here. It looks like we've got a few quick questions in the chat. Thanks, Kai. Great to hear from you. We've done a lot of business over the years. We've seen some interesting one. Lucy, nice to hear from you. Kimberly, thank you so much for your comment. Awesome. All right, guys. Appreciate you guys taking time out of your day. We look forward to working with you. If you have any feedback on anything, let us know. Otherwise, have a great weekend and wishing you all the best the remainder of 2024. May deal flow be high and interest rates lower. Talk to you all soon.
Take
Cheers.
care.
Bye.
Thank you, guys.